Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us is Harry Temkin. He's the chief investment officer at Drivewealth, a global brokerage infrastructure that helps power 100 fintechs, challenger banks, and digital wallets. And we're here to discuss the global investor report titled Drive Trends, the Year of the Millennial Trader. Harry, it's great to have you with us. Welcome to Trade Talks.
Thank you so much for having me. Great to be here.
What does Drive Trends study cover, and what are some of the top findings that stand out to you in the latest report?
Yeah, well, look, our latest report represents more than 12 million investors across our partners in the US, APAC, LATAM, and Europe. Again, and they trade through our partners using the Drivewealth API platform. And as you noted this year, the name of the report, the Year of the Millennial Trader. Now, why? Well, our data suggests that millennials represented the largest proportion of new investment account openings worldwide at just under 50%. Now, this potentially signals actually an influx of cash into investing platforms. Why? Because the US millennial wealth has more than doubled since the end of 2019 into the end of 2021. Now, a couple of other really interesting points. Millennials represented both the highest average trades per account at 19 worldwide and the largest proportion of trades in each region. And actually over 80% of their trades were notional or fractional based. That gives you an idea of how important fractional trading has become, right? You can trade as little as a penny in any security you want on the platform. Now, it also suggests that millennials have moved beyond meme stocks, actually, finally, right? Moving more toward household and traditional names to create their portfolios. But here's one of the other really interesting trends that we saw, particularly coming out of Asia. I mean, we saw different risk tolerances across the global regions. And so, for example, two of the top traded symbols by millennials in Asia, as I noted, were the TQQQs and the SQQQs. That's the triple leveraged ETFs against the Nasdaq 100 index, right? So primarily made up of technology stocks, it's suggesting that millennials in that region really are motivated by riskier short-term investments with the potential for quick returns, a lot of day trading, if you will. While back here in the US, what we saw was much more activity in tax-exempt and muni bond ETFs, right, suggesting more of a flight to safety.
That's interesting. The APAC trends is what stood out to me in the report as well. How have investors handled the first half of 2022? It was pretty rough for us.
Yeah, totally. Look, I mean, many who invested amid the previous market sell-off and then the bull market turnaround of the outset of the pandemic, they're really facing for the first time a potential bear market, right? So the survey really showed us some interesting statistics about the way they behave. So one is, look, overall trading, I think we saw was a bit down because of how the market has turned, particularly the universe of securities. But with that being said, I mean, the millennials still poured into the market. I mean, many of whom are opening accounts, and they're managing their investments solely on a mobile device now. I think, look, the report shows inflation fears and concerns around gas prices particularly. I think were top of mind for all investors, regardless of their generation or their region. And in the first half of the year, we certainly saw, fixed income and electric vehicle stocks moving, not moving, but amongst, the most traded names or active names. And I think, again, that's probably related to interest rate fears and obviously the spike in gas prices. While there's obviously a potential for a recession, what's clear from the study is that for the first half of the year, I mean, retail investors continue to remain really active in the market.
Yeah, that is encouraging to see that they're staying invested. So do you have any insight into how they may perform for the back half of 2022?
Yeah, look, I mean, I think all investors, right, are remaining cautious, regarding the current market environment. There's just a lot of news they're trying to ingest and figure this out. But, even so, bear markets can bring opportunities over the long term. And I expect to see, elevated volatility as the Fed remains active in its rate hiking cycle. They're really trying to combat inflation. We'll see how much ammunition they have left here. And I think, though, once the signs of the inflationary concerns begin to wane and the Fed gets less aggressive hiking rates, I think that's going to open up the door potentially for the market to rally. And I mean, we're starting to see a little bit of that, right? Gas prices have come down over $1 a gallon. We've seen lumber come down, wheat come down, corn come down. So maybe we'll start seeing that in next month's inflation numbers and see, how the Fed reacts to that. But, again, I think investors are going to continue to watch the headlines very, very closely. And, again, I think, they're going to be looking to potentially hedge against the inflationary environment and build portfolios that can be resistant to the volatility for the long term.
And Harry, the demand for digital investing tools really has been the way to democratize access for retail investors, particularly the younger set. What does this mean for fintechs looking to revolutionize the way that people invest?
Yeah, look, I mean, I think without question, there's a whole new segment of consumers who want access to investing tools, all through their smartphone. And for sure, younger investors are definitely driving and motivating fintechs, neobanks, challenger banks to innovate, their product suite to improve access to investing. And whether that be equities or access to equities, access to crypto, self-directed trading, robo-advisory management accounts, they're even looking for passive type investing tools like roundups and stock back rewards, right? So, our recent partnerships with companies like Toss Securities in Korea, Goalsetter, Sprout FI in Brazil, I mean, they're all highlighting the amount of demand that millennials, have for access to investing. I just don't think, it's enough for fintechs and neobanks just to offer banking and payment services anymore. In order to compete for customers, I mean, investing's got to become, part of their standard offering.
So what does the future of embedded finance look like then?
So look, we like to say we're the pioneers of embedded investing. Our mission at Drivewealth has always been and continues to be the democratization of investing, and really to transform the investment landscape by offering new innovative capabilities to investors around the world. The products that we're creating, for our partners have the potential really to reshape, I think, the way that the way people, look to invest and manage their wealth. And to us, ultimately, the future of investing is when literally buying a stock is as simple as buying a cup of coffee. That's what our technology enables. It's the seamless transformation of money into investable assets, the seamless experience, again, of transforming money into investable assets that will convert every consumer into an investor, whether that's one trade at a time, one swipe at a time, one roundup, or one stock reward at a time.
All right, Harry, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.